Hello and welcome to the Smart Value Bites. I am Soumitra Sengupta. Well, we are in the election season and navigating the markets or dealing with the markets in the run up to elections is always a difficult and tricky period for investors. And so I thought that I would just have a small chat about that. In the period running up to the elections and election results, the markets are anticipating an event, right? And therefore, the volatility in the market spikes up as it has done now. The volatility index or the VIX has spiked almost doubling in the last 7 to 10 days. And it is a time when fear and anxiety can make us act impulsively, which is not good for our portfolios. But since we at Smart Values invest for the long run, we should not lose sight of our long-term goals and our investment objectives. It's very important for us to keep that in mind. So the first rule is not to do any transactions during volatile periods, not to react to what the market is throwing up and throwing at you, and to be more than anchored to the long-term objective. As far as our portfolios are concerned, we do not propose to make any changes based on the state of the markets. We will continue to follow the process and the procedure and the methodology that we have done so far. And we will not do anything that is short-term or impulsive in nature. If there are some changes in the markets, in the portfolio that is dictated by our algorithms, even if it is during this period, then of course we will go and execute those changes. Our algorithms have seen these kind of situations or events in the past, and we have complete reliance on the algorithms. So, as I said, during these times, it is very, very easy to overlook the long-term picture. But if you see the market performance over the last 40 years on your screen, you will see the markets really do not show any party preference. In some sense, the elections do not matter because the markets will take its cue from the underlying economic trends which have been buoyant for India over the last 40 years and is expected to continue to do so. The change in or the party that is in power does not appear to have too much effect on the stock market returns. And that is something that you can see from the chart on your screen. We are looking at the stock market performances during the tenure of prime ministers during the last 40 years, and it's really not it's really not significantly, there isn't any significant pattern or trend or theme that is emerging. So it is important to remember these things, to remember the long term and not get carried away by the short term situations. We will continue to monitor our portfolios and we will keep informing you about its performance and about any changes that happen during this period. Thank you.